Hey, everybody. Welcome to another week of PPP webinar. And I think we're going to be talking about the HEALS Act. Let's see if that actually becomes a real deal. And Adam Boatsman and I are socially distanced at Adam's office in his home, which is awesome. Yeah, see, we're 6 feet apart. And so anyway, just as a reminder, for everybody, as they're ramping on here, use the Q&A button to ask your questions, and then use the chat to go ahead and harass us or encourage us, whatever mood you're in. So I think we were going to have Jack go ahead and unmute and talk a little bit about some of the HEALS Act as we understand it. Hey, good morning, Joe. Good to see you too, buddy. And then we'll go back to Magnum PI over here. I think we've got a red Ferrari out there too. So anyway.
So we're wearing this specifically because we're going to pin to the video before we post it. Gary's going to learn how to wake surf today. So taking wake surfing after this.
I've never done it, so I can't wait.
I've never not gotten anybody up there on the first attempt. So challenge has been thrown down to Gary, and we'll have some funny video.
The pressure.
Funny, but this is the official boating shirt of the Boatsman family.
There you go. So Jack, you want to go ahead and take it?
Sure. So first of all, I have a shirt that would be appropriate for when it's my turn to take a lesson. So I'm happy to wear that when
you're next, buddy.
Okay. All right. So I guess I should preface everything that we say in the next hour or so that we know a few things, and keep in mind that this is a proposal that was put out by Senate Republicans. If you recall, kind of the first variation of all this stuff was actually back on May 12th when House Democrats proposed their Phase 4 stimulus legislation called the HEROES Act. And I would say it's become apparent that you have to have a proficiency in cool acronyms in order to be a member of Congress, apparently, because now we have the next act, which is
snacks over here too, Jack.
Okay. Oh, sweet. Okay. I don't have any snacks. I'll get it during break. So we have the HEROES Act, which it goes beyond just the PPP stuff. So we're going to focus on that, but there are other things that are in there in relation to employment issues, tax breaks, those kind of things. But we're obviously going to be focusing on the what's called the Continuing Small Business Recovery and Paycheck Protection Program Act, which is part of the HEALS Act. And so, when we go through this, any questions that you have afterwards that we don't know, we're probably going to answer the same way my teenage kids typically do, which is, So that's what you have in your future, because we don't know. And actually, quite candidly and seriously, the people on Capitol Hill don't know either. So this is just something that was put out. And let me go through a couple of the things that are in this program. So the proposed bill covers different additional expenditures in that 40%. So software, they give some examples: software, cloud computing, HR and accounting needs, property damage, supplier cost, worker protection expenses like PPE, so personal protective equipment. It was clear that we're still at the 60-40 range, so you're still within, the other stuff being only at 40% of the amount of the loan or the grant. There's some discussion about a different 8-week program, 8-week period that would be sometime before December 31st. There is the provision that we've been talking about, the $150,000 loan threshold, that there would be essentially automatic forgiveness. And a few more details on that, because I know there were some questions about that, is that what is thought to be the process, or is proposed to be the process, is that for loans that are under $150,000, the simplified process would be that the borrower attests to good faith effort to comply with the PPP loan requirements. They retain relevant records for 3 years. I would suggest you retain them for longer than that, and may complete and submit the demographic information. So they still have that voluntary program where you can give them some information about yourself. And it says the SBA may review and audit these loans to ensure against fraud. So don't feel falsely secure that you are going to go unscathed. I mean, I still say that potentially for random audits, not likely, but what about, again, I call it the angry employee that wants to stir the pot up a little bit, and then the IRS feels the obligation to go and investigate if they can. Then you have kind of like the middle section, which is the loans of 150 to 2 million. Similarly, that they are not required to submit to the lender certain documentation. We don't know what that is. It's likely something less than full documentation, something more than a simple attestation in the $150,000 level. And so retain records for 3 years. Again, you should retain them longer than that. And then lenders must review the application and submit it to the agency. What is not in there, or at least I don't see clearly, is what is the lender obligation under the $150,000 or below range. And I'm guessing that it's probably that not their problem. So they're going to say, we're just merely a pass through and it's all on the borrower. And there is some language, non-PPP related sort of, that is protections for lenders. There's also some provisions in here that are protections for employers with respect to people coming back to work and potentially contracting COVID and those kind of things. So there's other non-financial issues that have a financial impact that is in there. And then we've had some questions about 501c6 organizations, and there is a proposal to expand the eligibility of PPP funds to C6 organizations with 300 or fewer employees. There are some exclusions, which would include professional sports, political campaigns, and lobbying expenses, which is, I'm not surprised about the political and lobbying. About professional sports, I guess they're thinking that they probably make enough money. I don't know the reasoning behind that necessarily. And then there is this section about 190 billion, and this is what I think all of us have been waiting for, 190 billion of committed and appropriated funds to support PPP and what is called the PPP second draw loans. These second draw loans are limited to small businesses that meet certain revenue size standards. I don't think that has been published yet. And then the 300 employee limitation. And here's an interesting component. You must demonstrate at least 50% reduction in gross receipts in the first and second quarter of 2020 compared to essentially Q1 and Q2 of 2019. So comparative analysis of the first 2 quarters of each year, and there has to be a 50% drop in revenue. In gross receipts. That will probably have to be defined. I mean, gross receipts, gross revenue is what it is, but so that's why it's gross and not net, and removing some of those variables. 25 billion of the 190 billion set aside for companies. So you have this internal group within the 190 billion of 25 billion set aside for companies with 10 or fewer employees, and 10 billion for loans made by community lenders. So they're trying to put money into the smaller banks, the smaller community lenders, which we have plenty of here in the Charlotte community. So that is really kind of an overview of what the PPP portion of the bill proposes. There are other things, things like it's called the Safe to Work Act, which is liability protection for healthcare providers, schools, and employers for exposure to COVID-19. There's proposals for recovery rebate checks. The first round was $1,200 per individual, $2,400 for married filing jointly, and there were some limitations obviously with that as to who qualifies for that based on income. And then there are other unemployment benefits. So I heard an interesting conversation this morning on the radio, and it was a Senate Republican essentially defending the drop from 600 to 200 on the additional funds going to people. And what was interesting is not that it was being defended, but the reasoning behind it, which was that at $600 per person, well, I take a step back. The goal of most unemployment programs is not to restore an individual back to 100% of previously earned wages at that level. What has happened with the $600 is that people have exceeded the 100%, which is why people are staying home and not working. And it has increased the average. The typical average is 70% of your wages is the goal in most unemployment programs. And that has been increased to 80% or higher in many cases. So what they are attempting to get at is an average of 70% of restored wages for people who are on unemployment. And they're looking at $200 as being the number. And they apparently have looked at other numbers and other ratios, et cetera, but that at $200, that gets you to the 70%. There was the question, well, why wouldn't you do it on a case-by-case basis to say, well, if the goal is 70%, why wouldn't you look at what is actually 70% of my wages as an unemployed person? And the answer was actually pretty simple, which was, it's just a logistical nightmare to do something like that. On an individual basis to say, we're shooting for 70%, what is 70%? That's what we're going to provide you. So is it $261.20? You know, it's just not logistically feasible. So they're picking a number so that they can expedite getting the money out, because also in doing it on a more detailed basis, you end up with just a bog down in the system and trying to get it accurate to be close to 70%. So again, other provisions that are in there that are more tax related that others on this call on the other end are more qualified to talk about should they wish. But so that's essentially the rundown of the PPP stuff. And obviously, as we've talked about in previous discussions, more to come. This is what is, first of all, we're not even at the point of interpretation by the SBA or Treasury. We're at the point of still trying to put the ingredients into the mix to come out with something out of the oven that can be reviewed and consumed by the general public. So that is in about 15 minutes or so, the summary of what has happened recently with respect to PPP on the Senate floor. Oh, and one more thing, that there's disagreement amongst Senate Republicans, even with this. So, you know, the reality of us seeing this money anytime soon is down the road for a number of reasons, including the fact that Senate Republicans are not on the same page, and then it has to go to the House, you know, and so there's this interaction between the chambers, but there's also non-alignment within the Senate, which is controlled currently by Republicans. So again, that's not a political statement. That's just where things are.
Yeah. Not to be the contrarian to Jack, but while I'm doing it, the only thing that I'd really add to what Jack said on the PPP side is that, part of the other qualified expenditures that was talked about was also upgrades to HVAC systems. I could see, that's expensive. So I could see a scenario where maybe there's a little bit of a carve out on the 60-40 split specifically, but some of the other commentary that I'd seen about PPP specifically, especially round two, is that, because they're so close between the Senate and the Republican version, the Senate and the House version of PPP round two in terms of what Republicans and Democrats want, while McConnell and others are like, we don't want to do this again, one grand stimulus package and then we're done, famous last words. I really could see him saying, let's just take care of PPP for now and probably unemployment. Like if I was betting, I would say, we're going to take care of PPP, we're going to take care of unemployment as two carve-outs. And the reason for that is that you've really got three compelling deadlines that are coming up. Everybody knows that I'm on the webinar right now for the love of God. Three compelling deadlines. Yeesh, sorry if I just offended the person who's trying to call me. three compelling dates that are coming up. I really should put that on Do Not Disturb. 3 compelling dates that are coming up. Number one, obviously the expiration of the enhanced unemployment benefits is tomorrow. So, that's a big deal in terms of needing to do something. The second is the Treasury isn't going to start accepting forgiveness applications until August 10th because they want to have a web version, like a web application, to be able to do that that's currently under development. But there's also supposed to be another round of FAQs that come out associated with accepting applications for forgiveness, but they don't want to release those FAQs until Trump signs another stimulus package into effect, for whatever reason they want to do that. So that's kind of compelling date. Number 2 is the forgiveness dates coming up. The expiration to be able to apply for PPP round 1 is right. That's August 8th. Forgiveness applications August 10th. So I just see something happening because of the dates that are coming up on that. And then, the last thing is that, they're going on recess. So it just seems like, well, look, if we're going on recess, we're going to look like, if I can pass unemployment and I can pass PPP, I can look constituents in the eye and say, you're getting a benefit. Now, if I screwed over state governments as part of that process, it's like, well, sure that has an impact, but not directly on the guy voting for me tomorrow. So I could see something happening on the PPP and unemployment front just based on the confluence of deadlines that are all imminent, or at least I'm holding out hope for that. Other thing to hit on before we hop in is that, and somebody's going to pull the Gong Show cane out here in a second. Gary's got one on the side. Is that we were on a call with a banker before this call, and I just said, hey, while I have you on the phone, have y'all entertained or even heard of anybody who's closed a Main Street lending program loan? Because I have not, and I would have thought that, with our client base, if somebody had done something, I'd have heard about it by now. And the answer was no. And in fact, this banker was only aware of one that's been closed in the entirety of the country. So it sounds like there's not been any movement on the Main Street lending program. The banker's speculation on that was that, you're basically partnering with your regulatory partner, and if the loan goes bad, that's going to be bad for you. So, why take on the risk, even though it's supposed to be lower risk? Plus, I didn't know this, but I guess there's, one of the provisions of the program is that it can't be your existing debt that you're refinancing. It has to be somebody else's. So you're basically stealing. It's bank swapping. So, which I was not aware of. So Main Street lending program still on, but appears that that's not gone anywhere.
Yeah, all you have to do is follow the incentives, and then the behaviors will follow. So, I think so. Thanks everybody. We got 59 people on here already, and we still don't have a lot of new stuff to talk about other than speculation on, hey, it looks like the HEALS Act could be rumbling down the tracks. But first of all, I'm going to start with David's question because he got it in under the wire yesterday, and he's first up on the queue today. So David, your question is, for loans under $150,000 with full forgiveness, how would EIDL grants be handled since they normally would reduce the forgiveness amount?
I mean, we don't know the answer to that question because it hasn't been contemplated, but presumably you're going to get stuck with a $10,000 loan at the end if they don't change anything.
Also,
I can always see Jack nodding his head. Sometimes he does this though. or he goes,
What, you're giving away my tells? That's not, they can't see me behind the scenes.
Right.
Yeah, nobody else gets to see that, but we do.
Yeah.
Next question is from Tony. Tony, thanks for sending this to us yesterday. I appreciate it. Will there be another round of PPP small business loans? If there is, will a company be able to get another PPP small business loan if they need it?
You gonna hit that one, Jack, since you just covered it?
Yeah, and it's all we know is the parameters that they've provided to us, which is what they're calling second draw loans. And that is, as I said, no more than 300 employees, 50% reduction in gross receipts. So they're trying to basically, I don't want to say manipulate, they're trying to focus the money on people who, better focus it on people who need it, and not to trip over the missteps that when they just basically said, here's all the money. They're trying to allocate it and have some objective factors associated with it. So that's all we know now is that's the basic limitations. But then it's, okay, I think I saw a question in the Q&A about, well, what happens if the loss, the bleeding really didn't occur until after February of 2020, meaning in March, April, May, June, July. We don't know the answer to that. Right now, they had to basically, I mean, February 15th and the February time period has been used as kind of like a benchmark as to, which is interesting. It's kind of counterintuitive in this instance, in that January and February were used in some instances as being what was the norm at the beginning of the year prior to COVID. In this instance, they're using 2019 numbers and 2020 numbers comparatively to say that you have a loss. And it seems logical that a lot of businesses would not have been experiencing the hit to revenue until March, April, May, June, July. So I think that even though it says it this way, that I don't think it can be continued on this way, because it isn't a good benchmark to get the money to the people who really need it, because I think maybe kind of getting to the end of the story, or the point is that, how many businesses that were hurting the past 2-3 months were hurting back in January and February. And if you take that number and compare it to January and February of 19, is that really indicative of someone who really needs the money? And I don't think that that's the case.
So I guess that would rule out the guy that got the green Lamborghini down in Miami. I don't know, just a thought. This is from Babette. Sorry if I've mispronounced your name. It's either Babette or Babbitt, but I think it's Babette. So regarding PPP forgiveness, if an entity received the PPP and maintained or rehired their employees during the required period to meet the forgiveness rules, but after their PPP period ended, the business had restructured their sales processes and the result was that they ended up laying off people again, does laying off employees after the PPP period ended, basically immediately after the term ended, put the PPP forgiveness at risk?
So you got a couple moving parts on that. And for those that have speculated on the call as to why you always see Gary's biceps and he's leaning forward, it's because he's reading the question and he has to lean forward actually.
Yeah, I've got 58-year-old eyes.
Now I know. Small type up there. The camera's kind of far away. We need to get you like a big teleprompter. Yeah, so on this one, the only way that this one's really going to apply to you is if you're applying for the 8-week forgiveness period. So you're under the 8-week forgiveness period, you hired everybody back, you passed test, hey, yay, we're at the full FTE count, we're good to go, and then you let everybody go after that. In theory, that's fine. However, depending on how you deployed the money or not, you might want to consider, should you be on the 24-week time period? And I feel that a lot of calls still about, well, tell me again about rehiring everybody. And my answer to that is, why are you doing that? like, why aren't you thinking about the qualified exceptions? And again, the qualifying exceptions are, and this is my down and dirty for simple version, you know, the knucklehead won't come back. And I try to get him back. 2, I can't find anybody to replace the knucklehead that's qualified to do the dang job. And 3 is the world's come to an end, this place sucks, and that knucklehead's position is no longer available. So in this particular instance, you know, re-engineered the sales process. Man, if your sales are still the same, and then you're trying to go for a qualifying exception, you know, that's really just a disguise, hey, I now have an efficiency gain. But if you re-engineer the sales process because you had a sales disruption, you know, assuming, you know, at some level it's COVID related, you got a pretty good case for going for a qualifying exception. I wouldn't really be too hung up on hiring people then letting them go to meet the FTE count. Instead, I would be looking to the qualifying exception criteria. But again, you know, going back to the very beginning, if you're under the 8-week period, under the current guidance, hiring people back and letting them go on, you know, the very next day is perfectly, you know, you can debate the ethics of that all day long, but it's perfectly acceptable under the forgiveness application if you're going the 8-week route.
All right. Next up is how much can companies apply for? Is it going to be the same formula as the first round? Do we know?
I need to stop interrupting you now that I can read the question too.
Yeah.
Jack, you know, chime in on this one too, but, you know, based on, this is just simply commentary from Marco Rubio in terms of, hey, I really didn't think it would last this long. I kind of have a feeling that they'll probably try to do something that gets people through the end of the year, assuming that they meet the criteria, which was I had a 50% revenue reduction.
So my first comment goes back to what I said at the beginning, but my second comment is that I think it's a mixture of 2 things. I think it's a mixture of familiarity of process and rules rather than changing the rules, but I also think that there has to be changes in, as you said, you know, we keep hearing in the news about the resurgence of COVID, about employers basically stating policy that they're not going to have any bodies in their offices until 2021 or other things. So it's, you know, I think that this is maybe stating the obvious, that the extent of this was, it was, is, and will be beyond what anybody expected months ago. This isn't a flu season thing that happens and goes away. Eventually it might become something like that, but it's way beyond anyone's comprehension, just generally speaking, but also financially speaking, economically speaking. So we're still being reactionary rather than proactive in what we're doing, but it's the only way we can be. And it's the intersection of health and finances that, you know, and this is a totally tangential statement, that until, you know, we take responsibility as a country and doing what we need to do as far as getting this under control, there's ramifications for it. And whether you believe in wearing a mask or not wearing a mask, you know, we only have what is the science and data to go on, and, you know, we choose our adventure. So I don't want to say it's self-inflicted, because there's a lot of people that are following the rules and doing the right thing, but you know, so that's my my soapbox for the day, is that we need to collectively do the right thing. And the reason why I say that is I see a lot of people complying and doing the right thing, but I also see a lot of people that are being lazy, essentially, and not doing things that, I mean, if wearing a mask may or may not work, but if it isn't, such a pain, then go ahead and wear it, and so it'll be interesting as we go into the school season and as time goes on, what is going to happen. But back to the point is that the program, I think, is going to look different in the sense that there is a longer term view that this is not just one Band-Aid, it's a series of Band-Aids, and the strength and the length of time you have to have the Band-Aid on is going to just be dependent on a whole lot of factors, many of them not in our control, but some of them that are in our control. So anyway, that's it. You can, Adam, your turn if you want to jump on that while we're on the topic of non-financial stuff.
Jack was getting angry at us with all that.
Hopefully not.
Yeah, we're under the qualifying small group exception with temperature checks on the way in. So we both had a temperature check.
No, not at all. And you reached out. You showed me your 6 feet-ish, right?
Yeah.
And it's at a diagonal because of the way you guys are facing.
That's right. That's exactly right.
Yep.
So
Gary's not double dipping in the hummus, so I think we're doing pretty good.
I haven't hit the hummus yet. It's pretty gross when I'm trying to talk and eat hummus. This question is from Gamal. What about programs for self-employed with no employees?
Yeah, it's the same thing as it has been for that it's going to be based on your 2019 income, capped at $100,000, but 50%. It's capped at $100,000. I'm losing my train of thought. It's capped at $100,000 of your 2019 income, or 50%. I think whatever the greater, whatever the lesser number was, but you can still apply. If you're an S corp, that's going to be based off your W-2. If you're a Schedule C, that's going to be based off what your Schedule C said. Again, there's still a lot of people that are in this conundrum. So if you want to get an application in, you got to do it, pretty quickly here. And in this specific instance, we've got all the data to help out with that if you just shoot over an email. The conundrum that I'm still seeing people get in, though, is that, well, look, man, I was a startup. I didn't pay myself, and I had a loss. So what do I do then? Because I was living off savings. And that just seems like an unfair, I know they had to do something, but that just seems like an unfair measure that I hope they also address in the next go round.
Yeah, just for what it's worth, folks out there, and I'm not getting paid by or incented by Pinnacle Bank, but it's one of the few that I know is still taking applications. And we've had a couple people that were in that self-employed or no employee kind of situation that Brian read and the other folks over at Pinnacle Bank are helping. So hopefully that helps. Next question is actually a follow-up from David. For second draw, is the 50% reduction versus 2019 comparing sales from full period of Q1 and Q2 in both years? Our sales didn't drop until March 14th and had largely recovered by the end of June, but in between it dropped 63%. For the entire 6-month period year to date, June sales were down 23%. How would the comparison be actually computed?
Well, right now it's no comparison because it's not even got alignment even with Republicans who proposed it. But, Jack, correct me if I'm wrong or chime in, but right now it's a straight up, they got to pick some dates. So right now it's a straight up comparison. I can see this getting modified, at some point, but I still think at some level, there's going to be a cutoff period, and where there's going to be a problem for people is if you've recovered, but then you anticipate going down. So I use a good example of, well, this is going to suck. We had our quarterly call with a a janitorial services company yesterday, and they're actually doing fairly well right now because of all the additional cleaning that's going on. Like you guys, Jack's in his office right now. I'm guessing you guys have upgraded y'all's cleaning service to do some enhanced sanitation. That's
Oh,
an
yes.
additional fee. I know we have too. That's an additional janitorial fee. So they're up, but at the same time, they're starting to get calls from their customers who are commercial property owners that are saying, hey, our occupancy rate is going to be down, 50 to 80% because people just aren't coming in. Therefore, Jack's suite doesn't really need to be cleaned because ain't nobody coming in it, or only clean half of it or do something different. So that's going to be hitting them in the third or fourth quarter. Construction companies, same thing. The architectural index is, so while construction companies may be doing great right now, chances are that's not going to be looking too pretty at the beginning to middle of next year. So, I think there's a lot of this whole, I know they have to have some qualifying date period, but I think, it's going to have some unintended consequences unless they really think through this.
Yeah, I would say that my comments a few minutes ago when I was talking about the comparison and the second set of money was in anticipation of that question, because I just seen that out of the corner of my eye on my other screen, that question. So I agree that it's just, it doesn't make sense that those are the comparison periods, because it doesn't take into account the actual loss that occurred after February 28th or 29th if this was a leap year. But so yeah, I agree. There has to be some additional thought into that, but there's also mitigating factors, like you said, that the cost of doing certain things is lessened because of the fact that the actual occupancy of our offices. I mean, like you said, I come into the office not as often. In fact, this week it's just been one time today, maybe tomorrow, but as efficient as at home in doing stuff. And so, but the expectation is by my, I say my employer, by our management, is that when I come into the office, that it's a clean environment. And but if someone isn't going to come into the office on certain days, do you change that pattern of behavior and that cost? And then what are the consequences on the other end? Those businesses that are doing the cleaning, now their revenue's down as well. So it's all of this stuff is so interconnected, and that is, I think, just generally, again, maybe stating the obvious, the challenges in putting together any program is just anticipating or trying to anticipate, if you go in a certain direction, what are the potential consequences or the cause and the effect of doing certain things. And in most cases there is a hopefully more positive than there is negative, but there usually are negative impacts on some in any decision that is made. There's no perfect decision, especially when you're dealing with millions of people, many businesses, and then you have other factors like, okay, childcare. It's like, how do people actually go to work when they have a child around? So if there's an expectation, I think we're in an okay kind of place for the most part, because a lot of people are still working at home, so they can become their own nannies again. That's called parenting, and I say that jokingly, obviously, as a parent. Fortunate that I have teenagers that are very self-sufficient, but I know that a lot of my partners and friends, gosh, they get a lot of their work done at 1 a.m., 2 a.m. It's as if they have infants at home again, because that's their schedule. So anyway, so yeah, I think there's going to be, again, keep in mind, this is the same pattern that we've seen months past, which is there's stuff that's thrown out there, it's worked on, it's potentially agreed to, and then the implementation has to happen. And then the corrections to the implementation have to happen, a la FAQs and other amendments to the various provisions that are out there. So that's where we're at in that phase of things. And to Adam's comment, it's funny that you said that, you know, the House version, some of the provisions in the House version back in May, end of May, beginning of June, look very similar to what is on the Senate on the Senate floor via the Republicans. Because when I was first doing this, I thought I was looking at the version that came out a couple of days ago, but I was actually looking at that May version. I was like, okay, this looks right, but something's not right. And then I scrolled back up and I was like, oh, this was published in May. And so I was like, okay, but then I had kind of both sets side by side, and there are a lot of things. So for all those things that you said, you know, I am optimistic. I don't want to be, you know, a downer that this isn't going to happen anytime soon, but I am optimistic because of those things that you said, that they're similar, all these time constraints, and the fact that, you know, the Congress simply cannot, they can, but they shouldn't go home without having this resolved. There would be a lot of accounting to constituencies if that were to happen.
Yep, it is an election year, so they're mindful of that. So Robert, I think we addressed this from a different angle, probably before you put this question up. But the question is, I hear that the Fed's rejecting many of the Main Street Lending Program applications. Any insight as to why they're rejecting it? And our point was, based on our conversation with this commercial banker earlier this morning, he knew of only one that had gone through, but it wasn't that the Fed was rejecting it. It was that the banks were reluctant to do it because of fear that they'll be on the dookie list of the Fed if that loan goes bad.
Yeah, I have, to reiterate, Robert, you know, if you want to shoot us a link to anything that you found, you know, out there, we haven't even heard of anybody that's even applied at this point. I think, you know, literally I've had one email from one client saying, hey, what do you know about this? And I told him and said, keep me posted on what happens. But we haven't, to my knowledge, had any client even apply. And you got the answer on the approval rate. So I don't know where the hang up is other than what we said earlier. Jack, have you guys heard of any, like, have you guys had any closings that you're aware of at Shoemaker, or?
Not in this office that I'm aware of. And, you know, the fact that I see our new client matters that would be specific as to that, I really haven't. And so, yeah, kind of the same thing. It's as if there just hasn't been a focus on it, both on the lending side, the application side, and, you know, the focus has been on the PPP, maybe because that's lower hanging fruit. I mean, those are potentially free money. So maybe people are focusing on that rather than going through the rigmarole, as I'll call it, of going through a more formal loan process with Main Street.
Next question is, I'm planning on applying for the PPP forgiveness using Safe Harbor number 2 for the FTE. According to the instructions on the application, as long as the amount of employees I end the 24-week exceeds the average for February 15 to April 26, we qualify for full forgiveness, even if we haven't restored our FTE count to our pre-disaster amount. Is that true? Or do I have to restore my full FTE count prior to the end of 24-week period to qualify for the FTE Safe Harbor number 2?
Yeah. So I'm going to stop for time, Jack, while you bring up the instruction sheet. Because, you know, my honest answer is, you know, I used to have these dates nailed, and somehow in my old age I've forgotten them. But I had thought that the FTE count test period here was your application, a rolling 16-week period, or January through February. I'm not quite as familiar on February 15th through April 26th as being an average FTE count in terms of calculating an average FTE count. But all that said, okay, he's thumbs up, so we'll go to him next. But
Breaking over to Jack.
Yeah, all that said, I mean, your question really hits what I brought up in the opening monologue, or if it's two people, is it monologues? Is it a lot of people are getting really hung up on this whole, hey, I hire people, but like in your specific instance with 24 weeks, this was contemplated. That's why I went to 24 weeks, is because they don't expect you to be at the same, like how would it even be possible that you could spend the money over 24 weeks but have the same people count? The only way that would work is if you cut everybody's salaries way down. So the whole reason for the 24 week is that there was an expectation that you're spending the same amount of money on less people. That's why the 15.5 went to $46,000 in terms of the amount that you could spend. And that's why they got pretty, liberal or business friendly on the exceptions around not having the FTEs in place, meaning I can't find anybody, they won't come back, or there's been a business disruption. So my point in saying that is that everybody that I've talked to that has brought up rehire people, I literally stop right there and say, I do not know why you're worried about that. I would be going for one of the other exceptions. So with that in mind, Jack, where did I screw up?
No, that's good, and good stalling. You didn't even have to talk more slowly. You got it good. Okay, so it does say, and I'm looking at Schedule A worksheet for the PPP. As far as under Safe Harbor number 2, step 1, enter the borrower's total average FTE between February 15th and April 26th of 2020, and then step 2, enter the borrower's FTE pay period inclusive of February 15th, and then you go through the calculations. So we are talking about averages, but I will reiterate and agree with the fact that, first of all, that some low barriers to getting into these safe harbors, essentially, especially after the second safe harbor, which is if there's something that impacted your business, like government imposed shutdowns and those kind of things. It seems like it's easy to fall into those exceptions. And, I'm getting similar questions as to clients who are asking about a scenario where it seems like they're trying to force themselves to getting into a certain number when they might have these exceptions available to them. So, again, I would agree with and suggest that, if there's a way to an easier path rather than forcing the numbers to get it to, be ultimately safe within the money without exceptions, then you should consider that.
And I think related to that, the fact that the question revolves around the 24-week period, I mean, the reality is we believe it's highly likely you're not going to be able to ask for forgiveness early. It's either going to be, now under the 8-week period or after 24 weeks is done, which is effectively the end of the year. Point being that the odds that there's additional guidance around this one is pretty high. So I honestly, I wouldn't give this one a whole lot of thought other than trying to qualify under the other exceptions, because the likelihood that you're even going to be able to apply for forgiveness is pretty low until after the new year anyway, if you had to go under the 24-week period.
All right, next question is from Karen. If a sole entrepreneurial person gets a PPP loan, what is that person allowed to spend those funds on? Personal living expenses? How do you show that you spent the funds on qualified expenses?
In this particular instance, I mean, let's assume that you're a Schedule C, so it's considered, you're a sole proprietor, or even if you have employees, but it's Schedule C. So, you make $100,000. That was the basis of your loan. You still have the 60-40 split available to you. So you have rent, utilities on the 40 side. You also have auto expenses on the 40 side for this particular category of borrower. On the payroll side, you got 60%, but in your case, payroll is what you take home. And in a Schedule C scenario, you're not taking a paycheck. So what you have is effectively what your distributing out to yourself as part of the company. So if it was me, what I would be doing, since they really haven't provided, a crystal ball other than what'd you pay yourself during this time period, I would just write myself a check, put it in my personal bank account, and then use that personal bank account to pay my living expenses as if I had earned the money otherwise. That was the underlying basis of the loan, because that was really the intent, was to be income replacement effectively for self-employed individuals.
All right. Any other questions out there? I know that we are at 11:51, and it's still amazing to me that we've been able to talk almost an hour about hypothetical stuff that's still coming down, but
really slow.
Gary, there is something I want to share, and it's really not necessarily applicable to this group, because I presume that you participated in the calls because you are the recipient of a PPP loan. But I think that it'd be safe to say that many of us know some that were not able to get PPP loans for whatever reason, whether it was you didn't have that banking relationship that you could get in the door, or you didn't think that you qualified for it, or you just missed the date, that the deadline, despite us, at least on this call, saying, hey, T minus 6 days, T minus 4 days, T minus 2 days. So and I read this yesterday, it was published, and the title is No PPP Loan, North Carolina's Job Retention Grant Program offers up to $250,000 for small businesses. And so this is a state program. It's a job retention grant, so it's an entitlement program, meaning there are eligibility requirements. And the main eligibility requirement is you didn't get any PPP or Main Street lending program dollars. So again, not applicable potentially to most people on this call. So I'm sharing this with you to share with your extended groups of influence yourselves. So it is just a little bit on that. It is that you have to, the funny thing is, it's very similar to a lot of the parameters of some of the other programs we've been talking about, like the second round of PPP, which is demonstrate negative impact by the pandemic, meaning sales or gross receipts dropped, and in this case, at least 10% during COVID. And the period runs from March to May. So in comparison to what we just talked about, which is the comparative of Q1 or of month 1, month 2, January, February of 2020 to January, February of 2019, they got it right in the state program. So which is why I say also that there's probably going to be some modification to make it more applicable to reality. Qualifying companies could be in line for grants worth up to 125% of 2 months payroll, capped at $250. It can, let's see, and then there's a cap of $100,000 per employee. So, and the catch is that it's only $15 million in the program. So if this is something that somebody might be interested in, they need to hustle and get going on this. So I just wanted to share that as something interesting that I found yesterday.
Did you say 15 billion or 15 million?
Million. Yeah.
Gotcha.
Not
Billion. Thank you. Next question is in from Robert. Any changes to the tax implications of PPP funds, and does the proposed new law put the IRS in line for 100% tax-free status?
I think Jack dove into this a little bit more than I did. So if I misspeak here, Jack, keep me honest if you know the answer off the top of your head. But I don't think they addressed this as part of the HEALS Act, and it was not addressed, as far as I know, as part of the House package either. And the reason that I'm saying that is that I haven't read either in their entirety because they're pretty voluminous. I've read the synopsis, but the AICPA is still lobbying heavily, and I just would think that if you're still lobbying heavily, it means that it's not showing up, somewhere. So that may be like concluding that 100% of all people that eat carrots will die. But I don't believe it's in either pending. When I say pending, that's probably a bad phrase to use, proposed legislation. But
Yeah,
in
I don't
fact,
see. Yeah, I don't see that. I can, since we have a minute or two, we can talk about just a few topical things of the other tax provisions. One that I think is particularly interesting and important that is going to make our accounting people here at Shoemaker very happy, which is the full, at least the temporary, full deduction of business meals. And for those of you that are involved in reimbursements and dealing with that, business meals are generally subject to a 50% threshold. So that is big. Well, maybe for a little bit. I have not been having a whole lot of business meals out of the office. So, but I think generally speaking, as we go back into in-person meetings, I was listening on a call about client business development. It was a external call, and about how the in-person meetings need to come back into existence, that clients want to have that face-to-face interaction with their service providers, with the people that they interact with, the people they're paying money to for certain things. And so, and especially at the beginning of the relationship. So talking about the initial business development or onboarding, that, they want to make sure that, not only that you can put two words together in a sentence, but that you can, present yourself properly, in an in-person meeting and those kind of things. So that's, so a couple other things, the employee retention credit is, potentially being looked at to be adjusted. The work opportunity tax credit, that has to deal with a lot of workforce development. Safe and healthy workplace tax credit, which is a new refundable payroll tax for expenses for coronavirus testing, cleaning supplies, PPE, and there's some limits that they've been discussing, limited $1,000 for each of the first 500 employees, and then $750 for between 500 and 1,000, et cetera. And then state tax changes for remote workers and employees who perform duties in multiple states, dealing with the interaction of making income in one state into another and having to atone to those state Department of Revenues with respect to money, and then do what a lot of us have to do, which is sometimes pay money in one state and potentially pay money in another state and get money back from one of them because you've essentially double paid. So those are just some things that are in the current proposal that I'm sure will be massaged around and modified.
Last call. Any other questions out there? And just as a reminder to anybody still on this call, we will be putting this thing up on the BGW CPA YouTube channel. It'll be up later on this afternoon while Adam tries to pull me up on a wake surfboard. Any other questions?
On live stream on the YouTube channel.
Oh gosh, that's terrifying. Anyway, thank you, Jack, for taking time to, away from your filing to meet with us today. It's a good thing.
My pleasure.
Thank you, Magnum PI, for parking the red Ferrari. It has not been towed. I've been looking, and the cops have not taken it out of the front parking lot yet. And it's good to have you guys. Hopefully we'll get some of the stuff on the HEALS Act actually passed, but maybe if they watch this thing, they'll understand that they need to put the pedal to the metal and make it happen. So thank you guys for joining us. Thanks for all the questions and for staying on the crazy train with us. We'll be back next week, same time, same channel. Have a great day and a great weekend, y'all.
See you guys.
Bye-bye.
Thank you.